something's brewing in the stock market, and it's not just soup. If you've checked insightfulvalue.com lately, you know we've been watching some quiet movers. One of them? Campbell Soup Company. Yeah, the classic comfort food brand with a surprising market twist. The stock has been slipping, but is that the full story? Let's unpack what's going on. Quick note before we dive in. This review is for informational and educational purposes only. It's not financial advice. Now let's talk about Campbell. This isn't just soup in a can. The company owns a whole portfolio of well-known brands like Pepperidge Farm, Prego, V8, and Snyder's of Hanover. Their products dominate the shelves in U.S. supermarkets, from soups and snacks to sauces and beverages. This is a household name with deep roots, strong brand recognition, and massive distribution. So why has the stock been struggling? Over the past year, Campbell's share price has slid, partly due to shifting consumer habits, rising costs, and investor concerns around growth. Inflation has pushed up input prices, things like packaging, transportation, and raw ingredients. On top of that, private label competition has intensified, and some consumers are trading down to cheaper alternatives. In other words, the margins are getting squeezed. Their most recent earnings report reflected those pressures. Revenue came in roughly flat year over year, and while the company has implemented pricing increases to offset costs, volume has declined slightly. Operating margins took a hit, and that spooked investors. But here's the twist. Despite the pressure, Campbell still generates strong cash flow and continues to pay a reliable dividend, currently yielding over 3%. From a value investor's perspective, that kind of steady income, combined with a well-known brand and defensive business model, is worth a closer look. Campbell operates in a sector that tends to hold up well in economic downturns. People still buy soup and snacks, even when the economy slows. That makes it a defensive play, and right now, the market might be underestimating that resilience. The company has also been streamlining its operations, focusing more on core brands and divesting underperforming units. There's a renewed focus on efficiency, digital marketing, and even product innovation. Yes, Campbell is modernizing its portfolio to cater to younger consumers and health-conscious trends. They're not trying to be trendy, but they are trying to stay relevant. So where does that leave us? At Insightful Value, we keep an eye on companies like Campbell Soup because sometimes the market throws the baby out with the broth. When sentiment turns sour, even solid businesses can get undervalued. Our job is to break that down, cut through the noise, and find out if there's long-term potential behind the short-term dip. If you're into this kind of deep dive analysis without the jargon, check out insightfulvalue.com. We explain the numbers and the story behind them, so you can make smarter investment decisions whether you're a newbie or a seasoned pro. And if you found this helpful, don't forget to subscribe to our channel, give us a like, and visit insightfulvalue.com for more insights like this one. We've got a whole library of undervalued companies worth exploring. Thanks for watching, and we'll catch you in the next one.